Today, we're diving into a stock pick that could potentially skyrocket your portfolio. But before we get into the nitty-gritty, I have an exciting opportunity for you. Winston and I are up over 50% already on our teaching trading portfolio this year. We did over 100% in 2022 and in 2023 as well. And next week, we will be hosting the first ever 3-day masterclass on how we do what we do. So for 3 days at 8 p.m. Eastern time, that's New York time, I'll teach you for an hour each day what trades to set up and when, and how to automate profit taking and risk management. So you too can potentially trade and make money in just 3 hours a week. So you've got more time to spend on the beach with your furry friend. So head over to felixprehn.org/masterclass to secure your free spot now. And guess what? My adopted golden retriever Winston has sniffed out some incredible research for us today. So let's get started. All right, let's talk about the stock that Tom Lee believes could bring massive gains. But first, let's set the stage. The stock market is at an all-time high, and many investors are wondering if it's the right time to buy. Should you wait for a dip, or is this the moment to actually put your money in the market? Well, stick around because the answer might surprise you. The market is experiencing a surge, and while some call it FOMO or greed, there is a strategic pivot happening that investors need to pay attention to. Tom, my buddy Tom, has identified a key pivot point in the market. He calls it the bear pivot. For years, we've heard the doom and gloom predictions, the US dollar collapsing, stock markets plummeting, and the end of the American dream. But Lee argues that these perma-bears are about to get defrosted and change their tunes. Instead of predicting doom, these bears are now saying that the stocks are overvalued. But here's the twist. Tom believes this is the perfect time to invest. Why? Because the fundamentals of the market are strong, and he believes the American economy is resilient. Resilient, yes. Strong is probably not the right word. But let's break it down with some data here. Over the past century, US GDP per capita, I don't know why they say per capita. Capita is this Latin for head, right? Do you say, I don't know, I'd like 3 capita of lettuce? Or how many people are in your party for that reservation, sir? Do you then say 6 capita? No, you don't. You say people. It's weird, isn't it? It's really weird. Anyway, I'm getting sidetracked here. US GDP per head has increased by 610%. Even during periods of market stagnation, the economy continued to grow. For example, 1965 to 1981, the Dow Jones was basically on life support, but the GDP per head kept rising. And this shows that the market can be unpredictable in the short term, but over the long term, it tends to, well, moon. Warren Buffett's advice is timeless. Investing in the market, even at all-time highs, can yield significant returns over time. And this brings us back to my buddy Tom's stock pick. So what is this stock that Tom Lee is so bullish on? It's a company that's been at the forefront of innovation, consistently delivering strong earnings and positioned to benefit from current market dynamics. Actually, no, that's complete nonsense. It's a zero revenue, doesn't make any money. It's incredibly volatile. It goes up and down and sideways, a complete mad zone. It's not entirely sure how we could value it. There are no discounted cash flow models, no analysts really. So you still want to know? And why are you telling me this? Well, it's of course none other than Bitcoin. And Tom Lee has set a bold price target of 150,000 for Bitcoin, which is 10 times his price target for the S&P. Coincidence? Maybe he just added a little zero and thought that looks good. And here is why he believes it could reach those highs. But I have a twist for you. I think there is something better than Bitcoin, linked to Bitcoin, that you might actually like better. And I'll break that down for you just in a moment. But let's look at the Bitcoin bull case for a moment. So Bitcoin is often referred to as the digital gold. The Bitcoin gang did a pretty good job coming up like that with that marketing sort of, gimmick. And it's been gaining a lot of traction. It's been seen as a hedge against inflation, which apparently is transitory. And here are some key reasons why Bitcoin is poised for massive gains, according to Tom Lee. Now, we have more institutional adoption. So a lot of big financial institutions are increasingly adopting Bitcoin. We have limited supply. That's always been the good old sales pitch on this. Only 21 million coins will ever be created. Apparently, I'm sure it's true. By the way, I'm not doubting it. I'm just saying I don't understand how it works, but apparently it's true. And it would therefore be a deflationary asset, because if there's a limited number of them out there, it's not like the US dollar where just Jerome Powell wakes up one morning and goes, I know, I've got a good idea. I'm going to print $4 trillion extra. No one's ever done that before. I'll go into the Guinness Book of Record. I'll be like the central banker that no one's ever seen before. I'll finally be a hero of the people. And then he forgot about the inflation story. But anyway, as demand increases and supply remains constant, the price is likely to rise. We have global acceptance. It's now actually a pretty widely accepted form of payment. PayPal and Visa have integrated Bitcoin. I went for a foot massage last week. I kid you not, you could pay them in Bitcoin, which pretty cool, pretty unusual. I don't know why you want to spend your Bitcoin, but that's a different story. And it is, as I said, a hedge against inflation or against bonkers central bankers, because printing money at unprecedented rates is what we saw after COVID. And guess what? They're about to do it again. We're going to go into a recession and they're going to start printing money again. So you're going to get more inflation down the road and so on. So the limited supply nature makes it an attractive alternative to currencies. We also get a lot of tech advancement. There's more utility in it now. So stuff like the Lightning Network are making Bitcoin transactions cheaper and faster and everything else. So now that we've established the strong bull case for Bitcoin with Tom Lee's ambitious $150,000 price target, let's talk about what could be a superior way and a maybe more comfortable way for stock investors who maybe think the crypto thing is a little bit weird. And I would encourage you, get yourself a crypto account and just buy $100 worth. It'll get you interested. It'll get you curious, right? Anyway, what could be a better thing to do? Well, there is really only one option, and it is Coinbase. Coinbase isn't just a cryptocurrency exchange, it's the gateway to the entire crypto ecosystem. And here are some reasons why Coinbase could actually do much better during a Bitcoin rally. First of all, Coinbase generates profits through transaction fees, which increase as trading volume rises. And Coinbase has maintained a gross profit margin of over 80% for each of the last 4 years, in up and down cycles the whole time. Very impressive. And they have more diverse revenue streams. They have transaction fees, but they also make money from subscription services, custody solutions, and institutional trading. Yes, most institutions trade Bitcoin through Coinbase. If you have a broker that accepts Coinbase, call them, ask them where they're traded, probably on Coinbase. So this diversification makes its revenue a little more stable, less dependent on just Bitcoin's price alone. And it is the most regulated cryptocurrency exchange, which gives it a competitive edge. Its compliance with all the various standards means that institutions like it. And guess what? The more regulation we get on crypto, and there will be more, the better it is for Coinbase, because it's harder for the little guys to get in, because you got to hire all these lawyers and they're bloody expensive and you have to have a compliance team and you haven't got the money. And Coinbase is like, which is what the big banks do, right? Banking legislation is insanely complicated because JP Morgan likes it that way, because no one's going to start a bank next week. It's almost impossible. And then we have user base growth. So Coinbase has pretty rapidly growing user base, over 100 million verified users. And that generates this platform network effect, whereas if everybody's using it, everybody wants to use it, kind of the same sort of thing. And they're doing some interesting, innovative offerings and staking and DeFi and everything else. So they kind of want to be the one-stop shop for all things crypto. Now, there is a little bit of a downside, but it's also an advantage. Coinbase stock price tends to move in line with Bitcoin's price, and often with greater volatility. It means it moves more than Bitcoin does, both up and down. And this correlation has existed for several reasons. One, trading volume. When Bitcoin's price increases, it often leads to increased trading activity. More trades being made means more transaction fees for Coinbase, and therefore it boosts its revenue. And then sentiment. A higher Bitcoin price typically indicates positive sentiment in the crypto market, and this optimism sort of spills over like a flu and infects Coinbase. And as Bitcoin's price increases, more institutional investors may enter the market. And many of these investors use platforms like Coinbase for their crypto transactions, further driving up Coinbase value. And then the media attention. As Bitcoin surges, well, people cover all the cryptocurrencies, and the more cryptocurrencies get covered, the more the platform Coinbase gets covered. So we get these massive benefits in all directions. But the real thing is actually you could get amplified returns from holding Coinbase over Bitcoin if you believe the market's going to go up. Because Coinbase has, as I mentioned, a higher volatility than Bitcoin itself. So during a Bitcoin bull run, Coinbase stock may provide higher returns than Bitcoin. Of course, this could work in both ways. So in downturns, you get the falling knife scenario. So as you can see from the chart I'll put on here, which will show the Bitcoin chart and the Coinbase chart, you can see they move very, very closely together. So since 2021, the IPO, the correlation has been over 0.8. And for you non-mathematicians and non-economists out there, that means they move together like there is an 80% correlation. I can't really think of another word of correlation. Moving together. They move together. That's really the best way of saying it. And he moves swiftly on and mumbles. So there is a very strong relationship here. That's basically it. They're holding hands. So by investing in Coinbase, you're not just betting on Bitcoin, but you're investing in a company that benefits from growth in the entire crypto ecosystem while still maintaining that strong correlation with Bitcoin. So it's kind of like getting the best of both worlds. You get Bitcoin mooning, and you get potentially, and you get real profits and everything else. So investing in Coinbase allows you to benefit from the overall growth of the cryptocurrency market, not just Bitcoin. And as the leading exchange, Coinbase stands to gain from increased trading volumes, new user acquisition, and the broader adoption of crypto. Now, I remember when I first started investing in cryptocurrencies, I was very overwhelmed by the complexity of the market. I'm still trying to get verified by one bloody platform. They still haven't done it. Because they look at me and they go, I'm sorry, sir, you live where? And I say, well, it depends on the time of the year. And what's your passport is, and where is your tax residency? Well, it's somewhere else also. They don't really like it. I'm a little complicated. But Coinbase has made it much, much easier for anybody to get started because they're just a little bit more user-friendly. And Winston, well, he agrees. He's sniffed out this gem and he's got a nose for winners. Of course, this is not financial advice, but for advice from a golden retriever. And if you're ready to take your investing and maybe your trading to the next level, reserve your free seat at our first ever 3-day masterclass next week. Head over to felixprehn.org/masterclass. Grab your free spot. I thank you for watching. If you found the video somewhat valuable, then before we start to stammer, give it a thumbs up, share it with a friend or even a golden retriever, and I hope to see you on the next one. Tesla just dropped a bombshell that has Wall Street scrambling.
Wall Street shares are up over 20% for the past 5 days.
It's worth letting people know, hey, stock's still going up. And I'm wondering,
but it's not about their cars. It's about something far bigger that could reshape the entire company.